When learning to trade, there is so much information available at your fingertips, it's extremely difficult to understand exactly where to start. So today, I'm going to be discussing my 5 pillars of learning to trade, where you should be putting your focus on, and how you can become a successful trader. What's going on, guys? My name's Thomas, I'm a currency trader, and today we're going to be discussing my 5 pillars of where you should be focusing in learning to trade. Now, when it comes to trading and learning, there is just so much information available, so many different courses and traders trying to show you and sell you how to trade. It's important to understand what you should be putting your focus on. That way you can minimize the amount of time it takes to become a successful trader. It took me nearly 5 years to become a successful trader, and I know if I understood these 5 pillars, the time it would have taken me would have been significantly less. So my 5 pillars of where your focus should lie when learning to trade is trading strategy, backtesting, understanding money management, understanding trading psychology, and writing a trading plan. Now, if you've got these 5 things and you focus on them one by one, I guarantee you're going to streamline your trading learning journey. So let's start with the first and arguably the most important is having a successful trading strategy. Now, if you don't have a successful trading strategy, then how can you be a successful trader? You need a strategy that you need to be trading in order to be able to take profits from the market. Now, where do you learn about successful trading strategies is through trading educators. Sure, as you become a more experienced trader, you're able to adapt and create your own trading strategies. However, at the start, you're more than likely going to be able to mold this from an existing trading strategy by a successful trader. So it's hard to understand and find the information of where to start looking for these type of traders. I have a couple that I typically recommend on this channel. 2 that I normally recommend is Tier 1 Trading and KB Trading. I learn a lot about the markets from both these guys. When it comes to trading currencies, it's going to depend on what market you're trading, but if you are a Forex trader, these are some good starting points. But find a trading educator that you're able to learn off, be able to potentially mold a trading strategy based off what they've found in the market. Now, if you're completely new to the market, it's obviously important to understand the fundamentals, and typically the best way to understand the fundamentals is through a trading educator. So I highly recommend you do your research in your realm and find the best educator that you can possibly find. A lot of traders will recommend going through, say, a school of Pipsology by Baby Pips or some sort of fundamental course in understanding the way the markets move. And although this is definitely important, it's important to understand that you don't go through information overload. Now, there is so much information available through Google searching and through YouTube. You want to make sure the information that you're actually understanding is relevant. There is so much irrelevant information out there. If you're a trader that basically just trades price action, then there's no point in you going out there and learning about stochastics and MACDs and indicators that you're never going to use. It just doesn't make any sense. So make sure you spend your time on what's important. And I understand if you are in the beginning of your trading journey, then you may not actually understand what you like and what you don't. So it's good just to grab a grasp of different things and different realms of trading, and once you find your lane, stick to your lane. Don't go learn about everything, because if you want to be a successful trader, you're better off just focusing on what works for you. And if you just go back to typical Pareto's principle or the 80-20 rule, 20% of your time is going to take up about 80% of the information that you're going to require. So let's just focus on that 20% and make sure that you understand exactly what's in your lane and stick to that as much as possible. And the best way I compare this is thinking about walking into a maths class. In your first class, you're not going to be learning about calculus, trigonometry, and algebra all in the same class. You're going to be learning that one thing at a time. So focus on that one thing to start with, and then you can make your way and understand more about the markets. All right, so you have a successful strategy, or you found an educator you're running through a successful strategy. Now, the most important thing about this strategy is backtesting. Backtesting involves going through past data and understanding the profitability of that strategy. Now, I've made several other videos describing and explaining exactly how to backtest and how important backtesting is. And to be able to understand if that strategy is possible, you need to backtest it. It's crucial. It may not be the most enjoyable part of trading. However, it's essential to understanding not only the profitability of the strategy, but just running your eye and seeing different timings where that particular strategy or entry signals have been entered. It's all about learning and improving your RAS, or your reticular activating system. That way, when you're scanning through markets, the trade ideas and the entry points are going to pop out a lot easier than if you didn't spend the time going through the charts. You know, the saying goes, it takes 10,000 hours to become a master in something. So if you're spending a couple of those 1,000 hours backtesting, then it's definitely a start to becoming a master of the markets. So when you're backtesting, it's important to understand the profitability of that strategy and also understand the drawdowns within that strategy. The worst thing you want to be doing is to take a strategy live and you go into a drawdown and you just think instantly that it's not profitable and it's not going to work for me. If you understand the drawdowns or how much you may lose at one particular time, it will help you gain confidence in that strategy and make sure that you ensure that when you are in a drawdown, that you are actually still within the realms of what you've tested with that strategy. Alrighty, so you've backtested the strategy, you have a trading system that's ready to rock and roll. It's important to understand your money management next. Money management probably is the most important part of trading, and it's understanding exactly how to manage your risk. Now, the typical mistake that most traders make, and it's the reason why 90% of traders will lose 90% of their funds in the first 90 days, is because they don't cut their losses short, they let their losses ride, and they cut their profits short. Now, it's crucial that you don't make these mistakes. You need to be able to let your winners run and cut your losses short. And how do you do this? Is by ample money management, understanding exactly how much the risk per trade. Now, typically two ways that people will manage their funds, either through fixed position or fixed fractional money management. As an example, I use fixed position, so I only risk between 1 and 2% on any given trade. And this basically means I can take anywhere from a 50 to 100 losing trades in a row before I blow my account. And the issue with most rookie traders is that they don't have fixed position sizes, they don't have any money management, they risk too much on individual trades, they don't use stop losses, and therefore they'll blow their accounts extremely fast. And if you want to become a successful trader, you shouldn't think of yourself as a trader, you more should think of yourself as a risk manager. Your goal is to manage your capital and manage your risk and ensure that you can continue to make steady profits while not blowing your account. And a lot of the times what happens with rookie traders which aren't able to manage their money correctly is issues with trading psychology. Now, it's crucial to be able to control your emotions when it comes to trading. Now, the issue with rookie traders letting their losses ride and cutting their profits short is due to not being able to control their emotions. Now, they have all their strategies back tested, they have profitable strategies that have awesome results through their back testing. However, when it comes to live money and real money on the table, seeing the dollars go up and down will have an effect on their emotions, and this is when they make rookie errors like what I mentioned before. Making these common mistakes will eat into your profits and therefore your profitability and the return of that strategy. That's why it's important to be able to control your emotions. Follow your rules of your plan. Follow exactly what you did with your trading system when you outlined it, with your back testing. Follow your money management and don't let your emotions get in the way of your trading decisions. Now, there's two different ways that you can learn more about how to control your emotions. Now, the first way is through reading. So I've made a video on this channel before about my top 5 trading books, and two of those were basically just focused on trading psychology. Mark Douglas has some awesome books which run through exactly how to control your emotions when it comes to trading. And the other is just by getting confidence. It's like anything. If you're short on confidence, you're not going to have that belief in what you're doing and your emotions are going to get in the way. Just like if you're playing sport and you're on a cold streak, the emotions and fear will get in the way of your success. And the easiest way to create confidence is just through time in the charts. And the easiest way to get time in the charts is through backtesting. And the last of the pillars I want to discuss is trading plans. Now, trading plans basically tie in pillars 1 to 4 or into one concise document that outlines exactly everything to do with how you get involved in the markets. To start with, it runs through your trading plan, rule by rule, step by step of exactly how you would enter, manage, and exit trades. It outlines exactly what you'll be trading through what you've tested and back tested in that strategy. It outlines exactly how you'll be managing your funds and what kind of risk parameters that you have involved, what's your maximum drawdown, how much you're allowed to risk on every trade, and basically anything to do with risk management of that strategy. And lastly, it will outline your rules of how you'll ensure that your emotions don't get involved with your trading. Now, again, I've also created a video exactly outlining how to create a trading plan, and I highly recommend you spend the time creating the plan, because it's important, just like any business, to have a plan in place. That way you understand and stick to the rules. Because if you have a successful trading strategy, you've tested that strategy, you have the money management plans in place, you need to have it all documented in the plan, and that will ensure that your emotions won't get in the way of your trading decisions. Now, thanks so much for tuning in, guys. That's my 5 pillars of exactly how to learn how to become a successful trader. If you're not sure of where to start, I'd recommend going through one by one and ticking off these steps as you go through, and that will ensure that you streamline your learning processes and don't make the same mistakes that I did in the past by going through and information overload and just learning information and things about the markets that I just never needed. So thank you so much for tuning in. If you did enjoy the video, please feel free to smash that like button. Be sure to comment down below if you've got any questions you want to ask. Otherwise, thank you so much, and I look forward to seeing you next time.